Success is a matter of luck. Just ask any failure. Earl Wilson. My friends, success in the markets, 10 to 15 minutes each and every day, learning how to track stocks and ETFs and everything else you are interested in. You know, the world of ETFs, everything from currency to commodities to sectors to indexes, you name it, Bitcoin, gold, you name it, it's all there. Let's jump into these charts. This is one of those days where everything is up. We'll start with the S&P 500. We are still bearish on the S&P, and I will tell you why. Because the bearish trend has been confirmed on the weekly and the two-day charts. It's a temporary bounce, and we think it is weak. The strategy is to short on any intraday bounce to maximize the risk reward. So what is the sell point? Well, the sell point is right where we are right now at 567 flat. We're at 567.13 as the markets have closed. The exit point, according to where we have found it, is 550. The expected move, somewhere in about the $17 range. We've done our back test accuracy, and that is 78%. We are 75% bearish. So we think that the bounce is weak, and it's going to go back down. Will we be right? We shall see, shan't we? Now, again, we're not a stock calling service. Bitcoin, gold, commodity, whatever it might be. We're an education firm. I want you to practice with us. And of course, you can see that we've had very strong down movement with increasing volume over the last 3 weeks. This week it slowed down. Will we even get to average volume? We still have Thursday and Friday. We had things moving down strongly on the two-day, bottoming right there on that two-day chart for the Wednesday, Thursday of last week. The Friday, Monday, red spinning top. And again, the Monday, Tuesday, well, let's see, wait a minute. Friday, Monday, and the Tuesday, Wednesday, we see is a green spinning top sitting right there below the weekly trend line. We've moved up on the half day, pulled back on Tuesday, popped up on Wednesday, but again, stayed below the weekly trend line. Will we breach that? If we do, then of course we'll be wrong. But we think that this bounce is weak and that it will move back down. We shall see. It was up nicely, 1.09% on Tuesday. What about the NASDAQ 100? It was up even more, 1.34%. Still believe that the NASDAQ is 70% bullish. We think the entry point's right about where we are now at the $480.50. We're currently at $480.89. Exit point 465, so that's about a minus 15.5 or $15.50 expected move down. 74% back test accuracy. Now you might say, Tom, why would I be selling the Qs or the S&P? Well, you're not. You're going to be either getting into a practice put trade, or you're going to be going to something like SH for the S&P 500. It's the single inverse. Read about them. In fact, I'll put at the end of today's video. Inverse funds, how to make money when markets crash, PSQ. Same thing you see there. That is the single inverse for the NASDAQ. That is where we are on stocks. Again, we see this up move as weak. I'll tell you a little more. The trend remains bearish despite temporary bounce at the 195 chart. You see it right there at the end. You've seen where it bounced up, pulled back, bounced up again, hadn't gone higher. We don't think it's going to go higher. What we would recommend is wait for a small retracement before entering the short. You may miss it if you do that, but you know what? First rule of trading, don't lose money. Second rule of trading, make money. You do the same thing in your practice trading, because the way you practice is the way you play. Where are we on 20-year U.S. government bonds? We see the entry point at $91.20. We're at $91.18 right now. You can see where things have slowed down over the last 2 weeks after really moving up particularly strongly those two prior weeks. That's the week beginning 24th of February and 3rd of March. Last week, green spinning top. This week, a little bit bigger candle, but again, I think there's a little movement on the bottom there too, which would make that a top. We see, again, a reversal forming with increasing volume, confirming the bullish momentum. So again, after having things pulled back some on that half-day chart and the 2-day, again, we see things moving along and again, getting a little bit more bullish momentum and moving up. Where are we percentage-wise? We're about 80% bullish. And again, entry point 91.20, exit point 95.50, a $4.30 up movement. And we see the back test accuracy at 82%. That's going back over the past many months and comparing what we see on the candles with what we see happening now and the accuracy of those predictions being at 82% for a continued up movement. Now let's move away from bonds, go to gold. Gold popping up nicely today, up nicely this week. Today, not up a whole lot, 0.41%. I'd been in a gold trade, and actually that worked quite well for me today. Actually, gold and TLT, 20-year U.S. government bonds. Perhaps I got out too soon, but I hit the profit point that I had put in with my good till canceled sell order. We are bullish on gold, 85% directional probabilities. What we calculate entry point is a little bit lower than we are right now at 280.50. Exit point 290. We expect a move of $9.50 and 85% back test accuracy. Why? We see a strong uptrend across all time frames and volume supporting further upside. You can see all that volume in what came up to average there on the 2-day. And over the last 2 days of those 4 candles, we can see that 3 of them were average or above average. So again, that is where we are on gold. Still bullish, strongly bullish. And again, it's beautiful to see gold. You know, once gold started catching fire back last July, it moved up until late October, moved down going into the end of the year. And man, since then, but for the 2 weeks sliding sideways, the 24th of February and 3rd of March, it has just been catching fire. Let's go to our last chart. That is HODL, which is the Bitcoin ETF that we track. We're still bearish on Bitcoin. It did zoom up today, 3.78%. Now, for a stock or something else, that would just be knocking out of the park. For Bitcoin, not so much. It pulled Bitcoin up right to the weekly trend line going down. You can see the interim low was last week. We hadn't hit that this week. We have a red down candle, but it's small on our Heikin-Ashi candlesticks. Of course, we're staying right there on that trend line that connects about 4 candles. We can see on the 2-day where we have a doji, means lots of indecision. We see where things, again, really plummeted down strong on Monday morning and afternoon, the 10th of March, and then sideways popping up a little bit there on Friday the 14th, and then sort of rotating over. Down day yesterday, popping up right to the weekly trend line. Where do we stand? It's a weak trend. Lower highs and decreasing volume, confirming the downside potential. Now, the strategy, look for a break below $24 before entering. Today we ended the day at $24.18. So again, you see it move below with volume. The $24 mark, you might want to go short. You might say, Tom, how do I go short Bitcoin? Hey, we got another inverse ETF for you to practice trade. That is BITI. I made some decent money on BITI last year. Somewhere, I think it was here in June of last year. And again, where Bitcoin was moving down and BITI was going up. And it was quite good for me. I ended up being able to recognize that pattern, and I jumped in, and it did me right. So again, let's see. It was down today, 3.93%. So again, consider going short if you see things break below the $24 mark on the HODL chart. That is where we are. We always love to hear from you. If you have questions, problems, concerns, don't hesitate to reach out to us, cw@chartingwealth.com. God bless my friends. All the best from the team at Charting Wealth.